Welcome back to the Russell Journal. My name is Russell, and this is my journal entry for today, Tuesday, November 22nd, 2022. So starting off, my account is officially blown up. I have like $13 left in the account. Not the first time this has happened, probably won't be the last time this has happened, but it's got me kind of in some real interesting thought mode. I do have one put left that is kind of a lottery ticket in the event that you're at a point on the chart of SPY where you can get to 403, and that's probably about you're going to hit that 200 day, and then you should really correct back down to the downside. Fair enough. So my real hope is that we hit that and then fall off of it into that you fall off of it back down. I'd look at Corey at the Stocks channel from YouTube, and really where he says he identifies SPY as trading between a range of 400 and 390 and 400, and you need a breakout up above. So really kind of, again, lotto ticket in here, probably not going to work out. No worries, I've got other things working. We'll come back and try again. The big thing that is really sort of really clear, I lost $1,000. Took me about a month to lose $1,000 in the market. Gained a lot of knowledge from that $1,000. That's pretty normal. If you're somebody who's trying to start out doing this, you should probably be really well aware losing $1,000 is not a massive loss. I could have done better. The real problem is that I could have done better. I probably could have hit my goal of hitting those price targets, or hitting the $125 a day, and I failed. And that, c'est la vie. That, welcome to the stock market. It's going to happen. I'm not going to sit around and kill myself for failing, losing only $1,000. The name of the game is much bigger than that, and stuff like that. What I do have to sort of break into and understand is that as far as my trading, my options trading goes, I really don't have an edge here. This is something that I've been looking at. I've been kind of playing with, and it shouldn't be. It really should be obvious. I have no edge, right? And I probably should have noticed that about. I got the 1,000 up to 1,500 and then back down to 1,000. And at that point, I should have recognized I don't have an edge. And we probably should have stopped and really thought things through a little differently as far as things go. When I try this again, we will definitely be more pause related, and we'll be doing stuff. So what's happening as far as the account goes? Well, in January, we're set to bump this up to either $10,000, or the other thing I may possibly take on is one of those funded trading account challenges where you can trade something like Earn to Trade or Zero Edge or Zero Hedge or Apex. They all have what are called prop firms, where if you pass their trading test, they will fund you between $50,000 and $1 million worth of trading funds. So we may try to do that next, as far as what we attempt to do. So far, the system that I had put in place that I was trying to use, which was a what you might call it was. So we were using a system called there was a straddle, which is where if the price is at say $100, you go long and short at $100 at the same time. And you just ride both to whatever conclusion they are. The problem is with $1,000, the straddle is typically done 90 days out. You're going to buy a contract at a 90-day expiration, and I was buying them with a 1-week expiration. So we were fighting theta, the theta burn, and that's really what crushed us here. That's what has really sort of stopped us from being productive in this. So what is clear to me is that as a professional trader, if I'm going to make it, is that we need to step those contracts much further out, start playing longer dated contracts in order to, one, capitalize on big gains and also big moves, and also so we're not losing money due to theta burn. So that's all kind of what I learned from this whole experience. And where we're going to try again later is looking to move away from those positions where we have the theta burn. The other thing that I've been trying to figure out too is exactly how much capital it really would take to earn about $125 a day trading in the market. That is a big piece of this. As of right now, because of theta, I would say $1,000 isn't enough, and I definitely need to step up the size of that. I do have money coming in January that should allow me to be able to make this and try it. I'm guessing around 10,000. I had traded with an account around 5,000 before and had pretty good success at that. So we'll step but I had to use that money for living expenses at one point. So I wasn't able to keep that as working capital, and that's kind of what's put me in this position. The other thing I would like to do is definitely step back again and do another project with another account where I start with, say, like $100 and try basically trading that up. So we'll see. I think that as far as I'm concerned, it is a game of trial and error. And every trader I talk to has basically talked about how many times they have blown their account up. I know Shay over at Humble Trader, she's blown hers up once. She had 1 year, was just a big $10,000 year. Loss, I have not lost $10,000 in a single year yet. About $4,000 is my total losses for this year. So I've definitely kept that pretty low as far as what trading allows. But she lost about $10,000. I know Be the Trader, he blew up. Income is concerned that will take some of the stress off of me to try and make this whole thing pay my bills right away. So that all of this is coming. It's going to be beneficial. I will definitely, in December, we'll do a this year in review episode, and I'll talk a little bit about what happened and what I did. Anyway, so as far as things go, I'm basically holding a 393 put, expiring tomorrow on SPY. We will see. It is the holiday weekend. Our volume was really only around about 59,000 today, I believe, on SPY. Very, very low volume. Kind of expected for the holidays. And I'll talk a bit now about the economic conditions, the economic picture, okay? What you do have setting up in SPY. Okay, so here's what I'm hoping happens, okay? I'm hoping tomorrow we get the unemployment numbers and we get the FOMC minutes and they crash the market. That's what I'm hoping. And the reason I'm hoping this happens now, and I'm hoping it happens tomorrow, okay? The reason I'm hoping for all of that is because we need tight economic conditions. And when I say crash, I'm hoping for a massive, massive pullback in the market. One more leg, one more all-time low, at least for the bear market, because we need that to happen. The market is being very stupid, okay? Now, and which depends on who you ask, okay? The market is trying to rally ahead of the FOMC in December. They want to believe that inflation has peaked and that the Fed is going to back off on interest rate hikes. They are not. Even if the next CPI brings you under 6% inflation, okay? Core inflation is under 6%. Even if that happens, the Fed is still going to do a rate hike, okay? That's coming. They're not going to pause. There's not going to be no hike, okay? That's not going to happen. And if you loosen these conditions, if you loosen financial conditions, if mortgage rates come down too much, before the Fed is ready, they are going to hit you, and they're going to hit you hard, because they do not want inflation to be entrenched. And they want you to be very clear. They want you to understand very clearly that they're not fighting high inflation. They don't give a shit if it's high. They don't give two fucks if inflation goes to 16%. They could care what your shouts. They don't care, right? What the Fed cares about is that it goes away. Okay? That's what they want. They don't care how high it goes. They care that it goes away. And they're going to make it go away. So if you think, right, that there is going to be some magic thing that makes inflation, that makes the Fed pivot here, you're wrong. This is why I have my personal January crash thesis. That is what that is about. Because once it goes away, which a deflationary crash would make that happen, then you will get a quantitative easing. Okay? That's fair enough. That's right. That's what you should be looking for. But this whole thing of like, oh, it went down, so now the Fed's going to start backing off. That cannot happen. And I'm telling you now, inflation has never come back to 2% with the Fed funds rate underneath, right? With the Fed funds rate below inflation. This is our inflation over here. Fed funds underneath that has never happened. Never. Okay? So guess what? Even if CPI comes in at 5.9%, the Fed is still going to hit you. And they're going to keep raising. Okay? Until these two meet, that's going to happen. And I guarantee, no matter how much inflation comes down in November, it's not going to be 4% inflation. You're not going to wake up with 4% inflation. So the Fed's going to go up even higher. And if you loosen those, if those mortgage rates comes down, the Fed will hit you with 75 basis points just to shut you up. Okay? So that is going to happen, right? And I'll go ahead, right? Sure, my account's at zero. I suck at trading. Fine. That doesn't change this. It doesn't change the fact that the Fed is fighting entrenched inflation. And if you loosen financial conditions too soon, they are trying to loosen them too quickly, and that will make inflation go back up. And here's another problem, okay? The last thing that we need to talk about from the economic situation. There is a released document that is the Chinese government is trying to nationalize their housing market, okay? What they're doing is they're offering government-backed extensions on loans to housing contractors, okay? This is something that happened. Now, if you want a really good example of where this explains, Steve Van Meter did a show about this yesterday. I would highly recommend you go check out Steve's channel and watch yesterday's show where he talks about the Chinese nationalization of their housing market. Okay, here's what's going to happen. They are nationalizing their housing market without fixing the problems. They're not adjusting those loans. They're not finding new sources of capital. The government is going to step in there. Here's what will happen long term for China. It is going to be an inflation nightmare over there. Okay? China will literally go Venezuela. And their export business won't save them. Okay? It will be an inflation nightmare over there because the government will have to pump money into the housing market in order to get it going. That will be artificial money. It will not be value created. Okay? So there is a point where a massive chunk of the world is going to have some serious inflation behind it if they do this. This is probably what is going to happen. It's probably been the Communist Party's mission the whole time, is to get it to a place where they could nationalize it, because communists tend to want to control markets, okay? That's not again, it's not a dig against communism. We're all probably not fans of communism here, but that is that. All right. So, going into the chart for today and what is happening on the chart, and this is all affecting the chart, by the way. There is a lot of people who are buying and moving money into markets anticipating inflation in China. There is Chinese stocks that are taking up, right? It would probably not be a bad time to start looking at Alibaba as far as like a good investment as far as if you're doing it in USD, okay? So there are some Chinese companies that you may, now I won't do it. I'm not a fan of China. I don't like their business practices. Nothing other than I don't like the way they do business. Okay, it's just that for me. So, but if you're interested in making a quick buck, my conscience won't let me do it. It wouldn't let me buy Tesla either. Just so you know, I'm not a fan of Tesla. I think whatever. There's too much hype. I don't think they're revolutionizing anything. They're just popularizing it, and I don't do popularity. It's not my favorite thing. Okay, so coming into today with the S&P 500, you can see we're on the 1 minute chart. Obviously, insane rally all the way into today. This is easily, for me, it's pretty simple for me to quantify this. This chart behind me is an example of buy the rumor, right? Woo, buy the rumor, especially on low volume, okay? Now, two things that are very interesting. In order for the market to go up, you do not need high volume, okay? You do not. You can go look through the whole summer, every day under the average volume, and you had an insane rally. You don't need that. So, buy the rumor, coming in. Boom, no problem. Okay, the saying on Wall Street, buy the rumor, sell the news. Tomorrow, they are hoping to catch some sort of surprise. They're hoping unemployment is ridiculously high and that this will fuel their Fed pivot thesis. Don't think that's going to happen. It could. It will be probably higher. Again, like I said, we had tech layoffs last week. Those guys call in their unemployment on Monday, and those reports should come out tomorrow with that. Second, FOMC minutes come out tomorrow. More than likely, you're not going to see the FOMC minutes help this. Could. If there is enough individuals who think that the Fed discussing a 50 basis point rate hike in December is the sign or a pivot. I don't think that's a pivot. That's a stupid pivot as far as I'm concerned. But the market doesn't care what I think. If enough of them think 50 basis point rate hike is enough of a pivot, then this will rally. My put cost me like $10, so I don't really care about that money anymore. And we have to start over anyway. There's no edge in that. It's quite literally a lottery ticket in the event that happens, especially given the fact that there's not a lot of upside potential for a guy who's trading with a stock account that's only got $13 in it. So, going to go to the daily chart. We'll do the normal routine here. All right, so trend up, bias up, momentum up, right? Boom. You gained back, you re-embedded, basically, from yesterday. That's it. So your bias, everything is basically long biased unless you are doing what I'm doing, which is I'm catalyst trading. I'm hoping for a catalyst that knocks this back down, takes it back to the 18. Okay? From a technical perspective also, I don't have it on here, but the 200 sitting at 403, just so you know. Chances are back over here, you hit the 200 and rejected. Everywhere along here where you've rejected is basically come off of the 200-day moving average at these major highs. So I'm basically expecting you hit that 200-day moving average. It is inside of the Bollinger Bands. So either the top Bollinger Band will be your rejection or the 200-day into your actual corrective move. Whatever happens, probably won't see most of that until Friday. But that would probably be a really great. If you do have money in your account, probably not a bad place to start to think about taking out a short position or, small positions, of course. Because this thing could blow through. It really could. Steve Van Meter, again, has reported on Sunday. He did a report where he talked about corporate money coming in and buying. The other thing that came in, watching, I can't even remember the channel, but the guys talked about dumb money and smart money are also all kind of buying. And there's a lot of people who kind of think that this is over. I think you're going to turn on a dime. I think you're gonna hit a wall and turn on a dime and crash into something. I'm hoping it's tomorrow. I took my shot for tomorrow. If that doesn't happen, we'll figure out something later. So that's kind of where I'm at with it. Hoping to